How do you do, ladies and gentlemen? I'm your host, Seth Julian, welcoming you to today's morning coffee briefing, and we are going to take a look today at this, the FOMC interest rate decision out at 1600 GMT, 1800 GMT, that's 6 p.m. GMT. The Fed is expected to raise interest rates by half a point, that's 50 basis points. They indicated between 25 and 50. We don't know exactly where it's going to go, but there's no doubt that interest rates are going to be raised because inflation is skyrocketing, and that's natural inflation. That's as a result of the supply line complexities as a result of the plague. That doesn't even take into account the inflation that is surely going to ensue from the conflict in Europe, where commodity prices are going to skyrocket. So we just take a look at one asset today. That is, well, two actually, but one class, and that's bonds. This is the 10-year German government bond and the 10-year U.S. Government bond. And what this shows us is that prices of these bonds fall when inflation rises. And that's because people buy bonds for the purpose of receiving the interest payment on the bonds. Bonds are referred to by traders as money machines because you buy them and they generate money for you. However, at a fixed return. That fixed return becomes less valuable as the inflation rate goes up. So when you're getting, I'll give you a quick back-of-the-envelope example. If you buy a $1,000 bond that pays 10% interest, you're going to get $100 a year. If, however, the interest rate goes up and making the value of that return go down, the 10% is less valuable, the price of that bond is going to fall. And that is indicated here by the sell-off in these prices. The confusion, there's a common confusion that results from this because the media in their infinite ignorance will tell you that yields are rising. Yields are rising on bonds, not really knowing what that means. What it means is that the price of the bonds is falling. And falling prices of bonds means that they're less desirable and there's a sell-off. So, ladies and gentlemen, with that, we're going to take leave of you today and just remind you that at 6 o'clock GMT today, the Fed is going to announce their decision about interest rates. It's going to be a slow day in the markets today, as it always is prior to a Fed announcement, but particularly today because this is going to be the first time interest rates go up in, 5 years or so, 6 years. So stay tuned. Fasten your seatbelts. It's going to get exciting now, ladies and gentlemen. We are in an inflationary environment. So this is your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now.